So despite all the conflict that we ended up seeing over the weekend, we ended up seeing with all the geopolitical tension taking place, the S&P 500 have a pretty bullish day, right? Let's actually take a look at Google over here and take a look at the line chart, right? For the S&P 500, we see that it was up nearly 1%. And it continued to climb up in the after hours. And in this video, I want to go ahead and provide some clarity on why that ended up taking place, but also talk about what are some things that we want to be mindful of going forward. So make sure to watch this video in its entirety. Also, if you find any value in this video, make sure to hit that like button. Now, why did we see the S&P 500 push up today? Well, one of two things, right? Number one, we ended up seeing crude oil fall down. Now, why exactly did oil fall down and why did stocks go up? Well, that's because Iran fired missiles at a U.S. base after the U.S. bombed Iran's nuclear sites, but the missiles didn't cause damage or casualties. Now, guys, I want to say this with all the respect I can. Of course, we don't want any casualties. We don't want anything going on. Because of this strike not being so successful for Iran, we saw that crude oil fell down. And in fact, we actually had a response from Trump, President Trump. He said, and this, I think this is kind of funny, crazy that he said this. He said, Iran had a very weak response, right? So he's almost mocking them, saying, you guys didn't do anything, right? And so, Iran had, warned ahead of time, and the U.S. was going to be able to intercept the missiles. And then, even with them sending the missiles, it was a weak response, right? That's what ended up taking place. But it wasn't just the sole issue of what's going on. I mean, that was a huge catalyst for why we saw the markets push up. But we also have some more good news, right? And when we'll talk about it, right? So we actually had and this is recent, just not too long ago from the time of the recording of this video, President Trump said that Iran and Israel is agreeing to cease fire, right? So this comes after, Iran did that quote unquote weak retaliation. So not only was it a weak retaliation, we're actually getting a ceasefire. So that's pretty bullish for the S&P 500. Now, something else that I pointed out that was a bit more technical for those that are insiders within Push for Profit research was this, right? I'm going to go ahead and show you guys something. We didn't have a daily briefing last night, but a chart that I showed, right? Now, this is a chart from JP Morgan, right? And I think, of course, it wouldn't do good to really show the chart, probably to read what I was saying with the chart, right? So it said, right now, and this is what I wrote within for the insiders within Push for Profit research yesterday night. It said, right now, hedge funds are taking a lot of exposure, right? Their gross leverage, which measures the total size of their long and short positions combined, is sitting at the highest levels we've seen in years. This means that they are very active in the market and are making a lot of bets. So hedge funds are pretty aggressive right now, and they're participating heavy in the market. Now, something that I often talk about within the insider group for Push and Profit research, or even on these public videos, I mentioned how institutional money is what moves the market, right? It's not your mom and pop retail traders that are, trading maybe a 50,000, 100,000, sometimes 1,000, whatever amount you're trading with. Maybe you're trading with 5 million, 10 million. That's not enough to move the market, especially for a lot of these mega cap names. It's these institutional traders. So going back to what I was saying is that here's the catch. While gross leverage is extremely high, their net leverage, which shows the difference between their long and short positions, is pretty low. And I said that how that's important because hedge funds, they're not fully bullish. They're not just buying everything. They're making long bets that are big, but they're also protecting themselves with large short positions, meaning they're going long and they're going short heavily. And it's like they want to go in on the upside hard, but they're also being cautious by hedging, right? That's what hedge funds do. They hedge, right? So why does this matter? Well, when there's this gross leverage that's high, but net leverage stays low, it means that hedge funds are stretched in both directions. Very simple. As I'm saying, they're going long and they're going short. They're hedge funds. And when that happens, right, the market can get jumpy, of course. But if the market starts to rally hard, especially the ones that are heavily shorted, right? A lot of the heavily shorted names, the ones that are being hedged, we can see a wave of short covering, right? So that means that hedge funds, they rush to buy back stocks that they were shorting to avoid a bigger loss. And when they buy back the stocks, it pushes up the price, right? I'm sure you guys are familiar with short squeezes, right? I mean, you guys probably heard of the GameStop debacle back a few years ago, right? The massive short squeeze. So short squeezes, they're fast, they're sharp, and they move high. And so that's essentially what this chart from JP Morgan was showing here, right? So that's something else that's pretty interesting. So we have this positive development of it kind of being a bit weak with the response and the retaliation from Iran, and then we get the ceasefire. And so that could ultimately push us where hedge funds that were shorting and going long kind of trim their short positions. But of course, when you're shorting, that means you're selling. So to close the position, you have to buy. And what does that do? That pushes the market higher. Now, I'm going to go ahead and price it from where we are currently, from where we close actually, right, to all-time highs. We're only 2% away. So we're kind of just like, if we just had another 2 days of what we had, it would just literally be in all-time highs again for the S&P 500. Now, granted, the S&P 500 isn't up very high for the year at all. I think, right, let's actually go back to what we saw over on Google year to date, up a measly 2.65%. Now, that's great, right? At least it's not down, but there's been many other names that have performed far better. And a lot of those names are names that we've participated in myself, and I shared within those that are insiders within Push and Profit Research, right? I share ideas, I talk about the market, I give commentary every single day that the markets are open. Now, of course, you don't have to join the Push and Profit Research Insider Group, right? What you can look into is what I developed, which is the Institutional Playbook. This is completely free to join, where I'm going to be showing you guys different strategies that I talk about within the Push and Profit Research Insider Group, right? So, of course, within the Insider Group, I talk about what's going on with the market and I talk about these strategies, but I wanted to create a bite-sized kind of, not too in-depth, right? Because maybe it may be too much, right? But just an institutional playbook. All you got to do is put your email. I'm going to have the link pinned in the comment section down below so you guys could check it out. But it's completely free, right? So take all the free resources that you can. And of course, if you like what you see, then potentially you may want to join the private group. But if you don't, that's completely fine, right? You don't have to be an insider for Push and Profit Research. But what I am saying publicly here is that if we just have a few more positive catalysts, we could easily see the market hit new all-time highs. And there's this interesting thing when sentiment that takes place. When the market hits new all-time highs, we tend to get even more optimistic and more money starts piling in. And then we could see the market continue to push up. Now, of course, with war, there's a lot of uncertainty. But one of the things I also talked about for those that are insiders was, hey, listen, a lot of times these are dip buying opportunities. I highlighted all the recent wars that we had and how there were dip buying opportunities. It typically doesn't escalate to anything further. Now, I'm not trying to say, oh, World War III is never going to happen. I'm not trying to be that guy, but very often it does not happen. Right? I've been participating in the market for what? It's almost 10 years now. How I cannot name you. Probably it's more than fingers in one hand, at least in one hand. How many times we had this concept or this idea of World War III, and every single time it's been a dip buying opportunity. Now, one day it won't. One day it won't. But right now we see a lot of positives. And so I want to end on that note. You guys let me know in the comment section down below, what are your thoughts? I'm very interested, right? Because I love hearing the different perspectives on what's going on with geopolitical tension. So make sure to comment down below. Hit that like button. I know I asked before, it really does help out with the channel. And also consider checking out that free resource. And with that said, I'll see you guys on this next video right over here. Take care, guys.